Okay. So going into SUI, let's start actually at the weekly time frame. 3-day. When SUI was right here, we were talking about that possible accumulation, those creating those tabs below the lows one more and continuing up while we got that push up while also breaking structure. This brought you to new lows, break that, and we can continue upwards. This was your market maker demand because after taking that much liquidity, you've made your first higher low before you broke structure towards new highs. From here on, we actually started to break bearish and we were trading towards that market maker demand. But I think the purpose of just this internal break and going towards this is to create a high time frame range to extend our options to buy here and sell here, because this is a really big range of almost 50%. So there's a lot of opportunity to sell above here and then also buy down here and trade towards the other way of the range, of course, because that's what consolidations do. This to me is a distribution. We did get it because, well, swing high, swing low. We front ran the swing high actually, creating more sellers into the market than taking it out, creating a sea of liquidity for market makers to short here. That's also what they did because they started to break structure. We have made a new lower low. And knowing that, we can now expect a lower high. After a lower lower high is expected towards new lower lows. Objective complete. In a downtrend, we draw our range from bottom to high. So with this high time frame range being in a distribution, we can also create internal range and maybe accumulate from there and overpower the distribution anyways. Because do we have to come all the way back here towards this build liquidity? Not really, and that is because we have already tested something amazingly and it brought us straight away towards new highs, so we really do not have to take all of that liquidity. So we're going to create the liquidity ourselves, creating a low, a high, taking out that low, of course, is our first deviation in our range trading. I thought this was a great level. We respected it here, also kept it up here, brought you down, you flipped it as well, tested it, and went back up. So that's why I wanted to draw this in. So now there's two things you have to do. You have to identify the amount and you have to identify an extreme liquidity, because that could be your third tap going higher. And of course, the other scenario is one more below this one. Well, I'm not even going to look at the first scenario I've told you, looking at the demand and finding the extreme liquidity. I will not even do that. That is because, first of all, this is all liquidity. It is all tested away. And yes, we can use this as extreme liquidity. But look to the left. Look at this green box. Why is this drawn in? It's because it's a demand zone. This brought you to a massive expansion towards the upside, and we did not even manage to test it right here. We built a lot of liquidity on the way up till there's enough taking on the highs, and then we basically reverse the game again and we need liquidity from the lows. And while we front ran this, makes it really interesting to go back to this low, take that out, and if we do get longs right in this green POI, man, you can maybe even trade towards new all-time highs from there. Maybe. because that would be an amazing bottom to continue trading upwards without actually completing this distribution. It was such an aggressive V-shape up that we're just getting a reaction from the market to build a bit of more liquidity because we just took some to continue our trends. We can go over the 4-hour locally. This brought you to new highs. That's also what wanted us to bring to new highs, which you can see. You can see the reaction. But sellers stepped in. We've made a lower low. We've made a change of character here. And now our order flow is switched bearish. There's enough trend liquidity to target here. I do not see, except this one, something to hold price up. There's still something untested here. It's the same zone for this one, but those are just parts we get that reaction from, right? You have to create this local little uptrend for in order to create that lower high. We want to see after a lower low, a lower high for new lower lows, but you have to uptrend internally to do so. So that's why you have few reaction points. If we did not have these reaction points, then this move could have just been one move. So this would be your supply as well. You can also call this your breaker, but I'm not gonna draw it in because it's gonna make the chart a bit messy. So testing that, we can possibly look locally for some shorts here. Go 1 hour. Right now we're just building liquidity on the highs. I want this retail liquidity to get taken because a lot of retail players are just shorting here. And I do not want to trade with them, with the retail players, because your stop loss would be above these highs. But that actually makes it interesting for them to take out and then reverse price while not giving a lot of retail players chance to make profit. This is also great, this little part. We're not even trading above it. Look how aggressive we're reacting from that supply zone. We do not even have to test all the way here. Now you tapped it and you started trading down. Also, this was your last pullback before you broke this structure, which was at this time pointing up. And that's why we get such an aggressive reaction from it. So what I would be waiting for here, let me see what this wick actually is because it's really ugly. This is what I am waiting for SUI. And are we going to, this is your swing demand and this will be your fine-tuned. But are we going to leave open all of this liquidity on the highs? It could also be interesting to scalp towards that liquidity. We need to take liquidity out on the bottom to start rolling towards the highs, and then we'll see what the market does. So I would even be down to scalp this scenario here. Okay, SUI done.